Hello team, this is Pat Walker at Mission Winners. I hope everybody's having a good, safe weekend. We're sitting here looking at Apple. The issue is not Apple. The issue is just the chart in the big picture. I was talking with Owen and he had a really good idea. Let's go through and really analyze the various parts of the chart. Just kind of tear it apart. So let's do this. This is the ticker symbol up here, and there's the name. Right here, the group. That's the group it's in. And this is the group rank. It's group number 56 out of 197. There are 197 industry groups in MarketSmith. All right? Average volume does over 81 million shares a day. It is a big institutional stock. By and large, we like stocks that trade at least 200 or 300,000 shares a day. Minimum. If you have less than that, they can whip around too much. They're called thin stocks, and they're great when they go up, but when they drop, you can get creamed before you know it. So this is the average daily volume. After hours, this is what it was doing after the market closed Friday, yesterday. All righty? This is what it did on Friday. It closed down $2.09, which was 1.4%. Volume was 93,200,000 shares, which was a 14%, okay, over average volume. Okay, now let's go through and look at this. These are the years, of course. This was the earnings in 2014. They earned $1.61. In 2015, they earned $2.31. Then they slipped $2.08. And that's for the year, by the way, not quarterly, year. But you can see overall, it steadily goes up. We like that. Each year, this is the high, and that's the low for the year. On down the line. Now you can say, well, Pat, why don't you have it here? Well, we're still in 2021, so by default, we don't know what the high or low will be yet. And the same thing is true for 2022. These are the estimates. This year, 2021, they're looking for a 57% increase in earnings, folks. That's big. That's a big jump. Am I saying it's going to happen? No. By the way, this is a consensus. This isn't from MarketSmith. This is a MarketSmith analyst, all right? This is consensus of all analysts that follow the stock, and they took the consensus of all of them. And on average, they're looking for a 57% increase this year over last year. In 2022, they're looking for a 3% increase. You can say, well, that's not much. 2022 is a long time off. So we'll watch and see what happens. Okay. I will tell you this, to see these green up arrows for this year and next year too. I like to see that. If it's not, that's a slight red flag. If it's a down arrow, which is red, that's a slight negative. Earnings per share rating. It has an EPS of 93. The best you can have is 99. The worst is 1. 93 is good. We like stocks with an earnings per share rating of over 80. Group rank B+. We like stocks that are in group ranks A and B. SMR, sales and margins ratios, A. You can't get better than this, folks. A is really good. Accumulation distribution, it's B+. That means it's being bought. This is on a scale of A through E, with A buying, A strong buying, B buying, C is neutral, D is a little bit of selling, E is selling. They're selling it. We want A and B. We lean on that. Composite rating on a scale of 1 to 99. And what do we want? We like that number, preferably over 90. And that's research from O'Neill and Company, and that's research from Pat Walker also. Timeliness rating, A. That's on a scale of A through E. A, they really like it. B, they like it. C, neutral. D, not so good. E, bad. PE, the PE ratio. For those that don't know, what is the PE ratio? It's really simple. It's you take the price, you divide it by earnings, and that gives you a PE ratio. So let's talk about that a minute, okay? I want to go slow here. Let's suppose a stock is selling for $30. And this year, they earned, or the last 4 quarters, they earned $5. All right? What's 30 divided by 5? 6, right? So it has a PE of 6. Just giving an example. PE of 33. One thing we don't want to see are extremely high PEs. But you also have to be careful with extremely low PEs because it means there's probably not much juice in the stock. Shares, it has 16.7 billion shares. All right, outstanding. Mutual funds own 27% of the stock. This is the group it's in. Group rank is 57 out of 197. Average daily volume. And of course, this is what it does. So just want to go through nice and slow. Now, let's take it a step further. Let's go down here. We can look at percent changes, which we like accelerating earnings, and we like accelerating sales. But we also can look at the raw number. 65, 73, $1.68, $1.40. Now, some people look at this and go, oh gosh, that's bad, it dropped. Earnings went from $1.68 in the December quarter to $1.40. Well, historically, the previous year, it went from $1.25 to 64 cents. So normally, it looks like they drop from the December to the March quarter. Sales were up 11%, 1%, 21%, 54%. What are they doing here? They're accelerating. All right? And we like that. These are things that we look for. All right? Earnings due, 7/27, July 27th. These are things to know. Now, this is a daily chart. All right? This is the daily chart. Here is the weekly chart. I'm going to show you this. There's the company, the group, market capitalization. I'm not really concerned about any of this. But up here I am concerned. Short interest. Stocks that have really high short interest means that there's big money betting that the stock's going to fall. Now let's think about that for a minute. A lot of times that's smart money, and they may know something. But let's suppose they're wrong. And could they be wrong? Heck yeah, they can be wrong. Sure they can. So if they're wrong and the stock starts going up in price and it has a large short interest, the people that sold the stock short, what do they have to do? They have to buy it back. Buying pressure. There are two groups. I'm going to go real slow here. Two groups of people that can be buying the stock. All right? Those that want to buy it to own it, and those that want to buy it to cover their shorts, the sales that they made. Short interest can be something that can be useful as far as looking at stocks. A stock with a high short interest may mean that there's a problem, but it could also be a potential, if everything else is good, that those short, if the stock starts to lift, those shorts will have to cover. There you go. They're based in Cupertino. Phone number. Came out in 1980. Earnings are due 7/27/21. Right here, this is what they said, what they expect revenues. Okay, this is from the company. 50-day average volume. And this is important. We like stocks that trade more than 200,000 shares a day, 200 to 300,000. If it gets really less than that, those are called thin stocks. Thin stocks can be manipulated, and they can run up fast and they can drop fast. Thin stocks, overall, let's quantify that statement. We don't like stocks that trade less than basically 200 or 300,000 shares a day. They can really hit hard fast. So we're careful with that. This is the 52-week high and low on this stock, on Apple. Now, let's go over here. 2014, this is what they earned. 2015, 16, you can see. And here's the estimates. And you can see green up arrows. They're looking for a 57% increase in earnings this year over last year. The stock has an EPS rating of 93. That's good. We like stocks with an EPS rating over 80. Group rank, 72. And that's fine. We don't like weak groups. Okay? That's important. Accumulation distribution. Oh, SMR. Sales margin ratios. We like an SMR of A and B. Okay? Accumulation distribution. We like A or B. Composite rating. We prefer composite rating over 90. Timeliness. A. We like timeliness of A or B. Sponsorship. We like sponsorship of A or B. That will help you. EPS growth rate, 14%. Good, steady growth. Earning stability, I don't really look much at that. Okay, I'm not concerned. You know what I can look at? I can just look here and see if there's stability there, just for what it's worth. Price ratio, I'm not really concerned about the 5-year PE ratio. All right, just for what it's worth. Return on equity, you can look at that, but I don't and have not seen a tremendous amount of research on that. That's fundamental stuff, and that's fine. But I'll tell you what's really important. Down here, group rank, relative strength rank, and the chart. Yield pays a dividend, so the yield's really small. Goes ex-dividend, book value. All right, we can go through this. Up-down ratio. This one's important. We like an up-down ratio over 1. It's similar to accumulation distribution. Debt, 151%. Not really concerned with that on stocks that are growth stocks. All right. Research and development, they spend 6.8% of their money on this. I'm not really concerned with alpha and beta. All right. Management owns 1%, banks. All this in here, I don't really look at this. Okay. I don't really look at this. Okay. I'm not concerned. The top stocks in the group, I do want to take a glance and see what if there's anything in there. Funds are buying it. Quarterly earnings and sales. There they are. So going through slowly, we can see that going here, Apple's got great numbers. Look at that. Has an earnings per share rank of 93. Composite rating of 98. I really, really like stocks with a composite rating of 90 or higher. Leading stocks in leading groups with earnings over 40% or higher, or sales over 40% or higher. It's great if it's both, but one or the other. I like stocks with a relative strength over 80. But on max list stocks, we can have an exception with that. By the way, relative strength is how is this price doing relative to the price of the market? We like a relative strength of 80 or higher. But on a max list stock, this is fine. And look at the trend. This is a trend. Let's talk about this a minute. Speaking of trends, this is the 200-day moving average. This is the 50-day moving average, the red line. That slight light purple line is the 21 exponential moving average. And the green is the 8-period exponential moving average. And you know about all that, okay? Anyway, I went through slowly just looking at the chart. Now, related items. Let's go over here. Related information. anything related to this stock is right there. You can click on this. These are who owns it, the funds that own it. I'm not really concerned with any of this, but I'll show it to you. Industry and sector, industry group rank 56. I'm not really deeply engrossed in any of this. So just for what it's worth, news, click on news, and you can get news stories. Options. Oh, and if you want, you can click on one of these news stories and it will come up right here. There you go. Any of these. Options. These are all the various options on the stock. Most likely you also, if you trade options, you have this on your computer. So you really don't need to look at this. Checklist. This is kind of neat to look at. Except for the relative strength rating, Apple passes on all the constraints. Isn't that neat? So anyway, I wanted to go slow, just pointing out the things to look for. Relative strength of 75. Now, we want a relative strength. We prefer a relative strength over 80. But 75 is still fine. And note, it's quite strong. It's quite strong. When it's moving up, what does it mean? It's outperforming the market. I'll say it again. When that relative strength line is moving up, the price action on this stock is outperforming the market action. That's a plus. We like relative strength lines that are moving up. Now you can say it's 75. We like 80 or higher. True, but on max list stocks, we have a degree of latitude with that. So it's not a game changer for us. Down here, that's the 50-day, that red line's the 50-day average volume line. Blue bars are buys, red bars are sells. There's some blue in there. Been some recent blue in there, and that's good. So I just wanted to go through and show you the various things to look at. Let's do one more thing, or a couple more things. Let's suppose you want to draw a line. Just pick anything. Hold down your control key, pick a spot, hit the left side of your mouse, the left click button on your mouse, hold it down, and draw it. And you can, as long as you hold it down, you can maneuver it around. When you want it where you want, you let go. And there it is. You want to erase it, you hit this. And this is one thing that there's an issue with sometimes on MarketSmith, it won't erase. Okay? If you want to put an arrow on something or a pointer, like, oh, this is really important right here, you can do that. If you don't like that color, you can click this and pick a different color and change it. Well, it won't change there, will it? But it'll change. It does change. Pick the color first. All right? Another line, to draw a line if you want to. This is if you want to insert text someplace on the chart. You can do this. And you can type something in there. Oh, I ain't going to work on this. I'm sorry. My apologies. That's unique. You want to change, by the way, you want to change a color or something like that. This is a blue background. I have to show you this. You can change it to yellow. That's too hard on the eyes. To green. You can change it to the blue. You can change it to this pale purple. You can change it to kind of a pink. For me, this is obnoxious. But if it works for you, that's fine. Whatever works for you, stick with it. There's the line again. View markups list. All your marked up charts, all the charts that we have. Hide markups. Okay. Hide the current chart markups. There you go. Except for the line. You can get rid of those. Track price. Line pen. Just do this. Hold it down. What am I doing? I'm holding down the control key on my keyboard. I pick a spot that I want, and I just drag it, hold down the line, let go, and it draws the line. And that's it. That pretty much sums up everything that we need to do. And that is, as I said, one obnoxious color. How'd you like to look at that all day? MarketSmith years ago had a much better blue, and I contacted them. They wouldn't change it. This is more of an aqua blue, so a little harder on the eyes. Rising earnings estimates. We like to see that. Okay? Green arrows. We like to see that. What do I look at first when I look at the chart? I look at the chart. How's it look? Is it a clean and simple flat base? The next thing I instantly look at, relative strength. I don't really concerned about the EPS rating, especially if I run my screens, I know that it already made the cut. I look at the chart. I look at the relative strength. Is it strong? Is it leading the stock in a new high ground? Instantly go down here, and I look at the numbers. Are they good numbers? Go up here. I look at the EPS rating, group rating, SMR, sales margin ratios, accumulation distribution, composite rating, timeliness. Boom. Right there, and then the estimates. You want to switch and look at a different chart? You can just hit Amazon. If you want to make a list, you can make a list. You can make a new list. Let's make a new list. You'll love this. You make it all caps if you want, whatever you want to do for the team. I'll put an exclamation point in. Isn't it cool? And I'll click Save. I have an empty list. You'll say, well, let's add ticker symbols. Put it here. Type in what you want. There's Apple, Amazon, Netflix, whatever you want to put in there. Baba, Ford, Valet, anything you want in there. Futu, anything you want, you can put in there. And then what you do, and you can change these columns and you can change where they are if you want. You can slide them back and forth. You can do anything you want. You can also do this. You can click on a title and it'll sort it. Descending or ascending, whatever you want. You can sort industry group name. You can sort by earnings. Look at this. Earnings last quarter. You can sort by sales last quarter. You can buy current price. Earnings per share rating. Anything you want, you can sort by. You can sort by composite rating. And I'll share this with you. By and large, and you know this, I love stocks with a composite rating over 90. Isn't it ironic? Look at these. Some of those names sound familiar? You bet they do. Anyway, wanted to go through here, and I just hope this helps you. I always sit there and think, what do I wish somebody would have shown me? Went through nice and slow. You can pause that video at any time if you want. Take notes. And if you have questions, feel free to ask. I'm here.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.